Hi friends, welcome to Ask Investment Academy YouTube channel. If you are yet to subscribe to this YouTube channel, please subscribe immediately and click on the bell icon to get instant updates on our free stock market awareness videos. If you are yet to subscribe to our Telegram channel, please subscribe immediately to learn about the technical analysis and various strategies in the stock market. Today we are going to learn about one of the advanced candlestick charts called as Heikin Ashi. Before going to learn about Heikin Ashi, first we will try to understand why we have to learn this Heikin Ashi and what is the advantage. Some of the new traders will analyze the stock in the line chart. Analysis of a stock or index in the line chart is not appropriate. The line chart will not give you any kind of information about its movement in the future. So we have to analyze the stocks or index in the candlestick charts. Already I have explained about the candlesticks, its time frames and different type of candlestick patterns in the previous YouTube videos. Please refer to those videos from my channel. Now we will try to analyze Nifty 50 using the candlestick charts. So go to displays, click on the candle. Now you can analyze the movement of the Nifty 50 using the candlestick charts by clubbing it with support and resistance or trend lines or candlestick patterns like one candlestick pattern, two candlestick pattern, three candlestick patterns. One candlestick patterns means doji, hammers, inverted hammers. Two candlestick patterns are engulfing patterns and harami patterns. Three candlestick patterns are morning stars and evening stars. With the help of these candlestick patterns, you can able to predict what is the movement of the stock or index in near future. Now, what is the advantage of advanced candlestick charts? Why we have to learn advanced candlestick charts? Why? Because you will not get a certain amount of information using the normal candlestick charts. Say for example, if you are analyzing a stock at this particular point of time, you might not know whether the stock is going to increase or decrease in near future. That means you will not know whether the stock is there in bullish trend or bearish trend. To identify the stock or index either in its bullish trend or bearish trend, you have to use advanced candlestick charts. One of the example of advanced candlestick charts is Heikin Ashi. So Heikin Ashi is an advanced candlestick chart which has continuous green candles or continuous red candles. The continuous green candle suggests that a stock is present in the bullish trend like this. A continuous red candlestick suggests the stock is there in bearish trend. Whenever the candlesticks in the Heikin Ashi has doji patterns or if it is having both head and tail like this, then it is range bound trend. Whenever green candlesticks in the Heikin Ashi turns into red candlesticks, then that means the stock trend reversal is about to come in near future. So how to calculate this Heikin Ashi candlestick from the normal candlestick charts? There is a mathematical formula. So Heikin Ashi open price is equal to normal candlestick open price plus normal candlestick close price divided by 2. Then Heikin Ashi close is equal to normal candlestick open price plus normal candlestick close price plus normal candlestick high value plus normal candlestick low value divided by 4. Then Heikin Ashi high value is equal to highest of normal candlestick high or Heikin Ashi open or Heikin Ashi close. Out of these three, whichever is the highest value, that will be Heikin Ashi high. Next, Heikin Ashi low value is the lowest of normal candlestick low price, normal candlestick open price and normal candlestick close price. Out of these three, whichever is the lowest will be the Heikin Ashi low value. So this Heikin Ashi chart is used to identify the trend. The trend is identified by the color of the candlesticks. Generally, Heikin Ashi candlesticks filters out the noise. If the candlestick chart has a mixture of green candlesticks and the red candlesticks, then it smoothens the variations and it will give the trend of the stock either with green candlesticks or red candlesticks. So what is the disadvantage of Heikin Ashi? Since these are modified version of the normal candlestick charts, it will not give the exact price at that particular point of time. So it is not recommendable to apply any of the trend lines or technical indicators on the Heikin Ashi chart. This Heikin Ashi chart is used to only identify the trend of the stock or index, whether it is in bullish trend or bearish trend. Then you have to come back to the normal candlestick chart to apply the technical indicators, trend lines, and your price action strategies. Now, instead of analyzing this Nifty index in normal candlestick chart, what I will do, I will apply the Heikin Ashi candlesticks. Once you click on the Heikin Ashi, you will get the series of green candlesticks and series of red candlesticks. Again, you will see series of green candlesticks and series of red candlesticks. Whenever you see series of the dojis with wicks and tails, then it marks as the range bound scenario. Whenever there is only one doji in the Heikin Ashi, then it signifies the trend reversal. So when you have to identify the stock is there in bullish trend, whenever you see two solid green candlesticks side by side, then you can identify like stock is there in the bullish trend. Whenever you see continuous solid red candlesticks, then you can identify like stock is there in bearish trend. Now say for example, Nifty 50 is there in bullish trend on 17th of May. Since this is 1 hour candlestick, at the end of 11:15, Nifty 50 is there in bullish trend. Now what we will do, we will go back to the normal candlestick chart to see whether we will get profit or not on 17th of May after 11:15 if you take the buy entry in the Nifty 50. Since you cannot trade in the Nifty 50, either you can take Nifty CEs or you can buy Nifty futures. Now try to observe. On 17th of May, Nifty was at 16,076. Now, as per your Heikin Ashi, at this particular point of time, you have got two solid green candlesticks. So, this candlestick is from 9:15 to 10:15. This candlestick is from 10:15 to 11:15. At the end of 11:15, you got two solid green candlesticks. So, this is the identification for your bullish trend. Now, when is your trend reversal occurred? Your trend reversal occurred at this particular point of time at 1:15 on 18th of May. Now go back to the normal candlestick chart to see how much profit you would have got in the Nifty 50. So at the end of the 1:15 on 18th of May, Nifty 50 was at 16,260. So Nifty has given almost 190 points of movement within one day. Okay, in this way you can able to identify whether the stock is there in bullish trend or bearish trend, and then you can take the appropriate trade as per the bullishness or bearishness. Similarly, try to see the bullishness and bearishness using the Heikin Ashi on the stock like Reliance. I will apply Heikin Ashi on the Reliance chart. Now it has continuous green candlesticks and the continuous red candlesticks. So here there are two solid green candlesticks on 2nd of June. So at the end of 11:15, it is giving a bullish indication. So when the trend got reversed in the Reliance on the next day at 3:15, the trend got reversed. Now switch back to the normal candlestick chart to identify how much profit you would have got by using the Heikin Ashi. So it has increased from 2,700 to 2,780 approximately. So almost 80 points of profit, which is approximately 3% gains in Reliance. In this way, use the Heikin Ashi for identifying whether the stock is there in bullish trend or bearish trend and take trades in the appropriate direction. Whenever you see two solid green candlesticks, it acts as the bullish trend indication. Whenever you see two solid red candlesticks side by side, it acts as the bearish trend identification. Whenever you see doji with wicks and tail, then you have to be cautious for the trend reversals. Whenever you see continuous dojis with wicks and tails, then it acts as the sideways movement in the stock. One thing you have to observe, whenever the stock is there in bearish trend, there are no wicks. Whenever the stock is there in bullish trend, there will not be any tails. If you see wicks and tails, then it will act as either trend reversal or range bound movement.